Disruptive technology looks to be destroying established market participants and displacing them with disruptive firms. The rise of electric autos is a textbook example. Electric vehicles will rapidly be replacing internal combustion engines during the next 15 years. At the moment, automakers are either unwilling or incapable of making significant adjustments. As a result, most current automakers will go out of business or severely reduce their production, causing their stock prices to plummet. New EV-focused companies will replace them, resulting in skyrocketing EV stock prices. As a result, both will be visible. In this video, find out why Cathie Wood was so enraged by Michael Burry, one of the most famous short sellers of all time. If you are new to our YouTube channel, please subscribe and click the notification bell to avoid missing new content. Dinero Association will regularly add videos to keep you updated on the latest business and finance news. Cathie Wood says Michael Burry should be worried. Cathie is an expert at spotting and riding high-growth stocks to new heights. Michael has an uncanny ability to identify terrific short plays and clip them at just the right moment. The entire market is vastly overpriced. The Fed is out of step, and interest rates will have to rise modestly if inflation reignites and the economy shows signs of life for various reasons. The two well-known investors are now locked in a death struggle. In his most recent SEC filing, Michael Burry disclosed that he was shorting around $30 million of ARK's innovation ETF using put options. Cathie Wood is understandably enraged. She then went on a rampage, completely destroying Michael Burry's case against her. As most of you know, Michael Burry made a killing shorting the housing market during the 2008 recession. The Big Short listed him as one of 4 short sellers. How short selling is making an impact to investors. Short selling has been a problem with innovation-related stocks for years. According to Elon Musk, the short sellers are jerks who wish us all dead. They are constantly striving to spread false rumors and exaggerating any negative ones. Cathie Wood has faced her share of adversity, but now she is up against the king of short sellers, Michael Burry. Burry is starting the world's most significant fall, the Big Short 2. Michael Burry has predicted a disaster equal to the 2008 recession, the dot-com bubble, and the Great Depression. In his latest 13F filing, Burry revealed that he had raised his bet against the stock market. This bet on America's destruction used put options. Unveil 100 shares of a stock at a fixed price. The price per Tesla share is $700 in this case. The put option seller is committed to purchasing those 100 shares at the predetermined $700 strike price. If Tesla stock is currently trading at $650 per share, we pocket the difference, or $5,000 in profit on those 100 shares. Here's why Wood is enraged. To begin with, the premium on these put option contracts is a cost. If the premium were $30 per share, it would cost $3,000 to purchase this put option contract covering 100 Tesla shares. By removing the profit from executing the contract from the cost, we make a net profit of $2,000, similar to a 60% overall return on our investment. Burry increased his holdings in Tesla put options by 34%, resulting in contracts valued at more than $730 million in Tesla stock. Additionally, he raised the value of his put options on a Treasury bond ETF by 53%, covering approximately $280 million of the bond ETF he is short. As previously stated, Burry also holds over $30 million in ARK's innovation ETF through put option contracts. Burry's put options on Tesla share bonds and ARK's innovation exchange-traded fund virtually scream that Cathie Wood is doomed. Her recent Twitter diatribe against Michael Burry indicates that Cathie disagrees with Burry's options. To put things in perspective, Michael Burry recently forecasted hyperinflation. Due to hyperinflation, he predicts the most remarkable fall in history for growth stocks and cryptocurrencies. One factor that I believe Wood overlooks with growth stock is the possibility of overpaying for growth. Tesla may become the Apple of automotive manufacturing, but the EV market is limited and a large portion of Tesla's expansion has already been built in. This is what happened during the dot-com bubble. While the majority of the estimates were accurate, so much growth was already priced in that investing in a technology fund at the top in 1999 would require nearly 19 years to return your investment. In Michael Burry's case, Cathie Wood stated that Burry has been blind to various critical indicators pointing against him. Cathie's argument begins with a comprehensive review of the stock market and economy and culminates with a scathing attack on Burry. Most bears appear to believe that inflation will continue to rise, reducing investment time horizons and destroying valuations, Cathie remarked. Since March, both stocks and bonds have risen. Despite what we believe is a supply chain related short-term surge in inflation, to put it another way, Michael Burry's gamble a few months ago is not paying off. Bond yields continue to decline as investors predict lower inflation than anticipated previously. Additionally, since March 2021, equities have consistently increased, indicating that the equity market is worried about inflation. While some may draw comparisons to the dot-com bubble, this is not the case. Please share and like this content and let us know what you think by typing your comments below. Keep your notifications open and I'll see you on our next video.